Our next guest says small cap stocks remain significantly undervalued compared to both historical averages and large cap stocks over the past 2 decades. And he sees some buys for this year. Joining us now is Kim Bolton, president and portfolio manager at Black Swan Dexteritas. Love that name.
You did it well.
Oh, thank you. How are you? Good to see you.
Yeah, pleasure to be here, Mark.
So I'm going to wrap up a couple of questions here. So you see a roller coaster this year for small caps, but you need to manage risk. But we were just talking off air, something that really stands out at the National Federation of Independent Business in the U.S., surging the most since 1983, just incredible animal spirits being released since the Trump election. So it's been tough for small caps since 2021. What's your outlook now?
Well, I don't want to be repetitive because, over the last few years, everyone's thought it's the year for the small cap. However, you're absolutely correct. The enthusiasm, the sentiment behind it is big. And it's actually sort of retreated over the last few weeks, but I think over the course of the year, there's a great opportunity. It's sort of small. However, I would like to encourage your listeners to focus on profitable companies. There are a lot of small caps around that are unprofitable, and they're a bit dicey, so I'd go for the profitable ones.
All right, let's look at these profitable companies that you're bringing to us here. We're going to start with Well Health. It's a medical digital platform.
And it's, the definition of a small cap is a publicly traded company that is under $2 billion in market cap. So here we have Well Health. It's done extremely well. It was sort of a sleeper over the course of the first half of last year, and then it finally started to come up on people's radar. So it's $1.8 billion, currently trading right around that 6.5. The average analyst out there has a 12-month price target of $8.85. So it still has a decent runway left. It's a practitioner-focused digital healthcare company that operates, in a diverse number of healthcare and digital platforms, all the way from the front to the back office. They supply software applications. They're big here in Canada. They got about 200 clinics, but they're also growing hand over fist down in the States, particularly in sort of 2 areas. But they've also, I guess the biggest thing that has happened recently with them is that they finally achieved a $1 billion revenue run rate. So, they announced back in November, and it looks like they're going to be able to keep the run rate going.
All right, very good. Next up here is computer modeling. What can you tell us about this one?
Yeah. So Well Health is out of Vancouver, and we're sort of moving across the country. So Computer Modeling Group is out of Calgary. It's been around for quite a while, and it's well known within sort of the oil patch side of it. And what they have is they have this sort of reservoir simulation software that oil and gas companies can use to actually see what they have under the ground. They have a number of products out there, and it's been a bit of a sleeper, but it's currently trading right around that 10.40 level. We have a 12-month price target of $13.70.
Now, next up is Enghouse, and this is one that's been around since 1984. We'll look at the stock chart here. It peaked in 2021 when most small caps did, around $72, now down around 26. So why do you think there's a turnaround coming here? Why are you recommending this one?
Well, they have a new CEO. Somewhat conservative, but he's very good at managing the business, and that's exactly what you need in this space. And so they're out of Markham, Ontario. It's a software and services company. A lot of people sort of compare it to like a mini Constellation, but they basically sort of have two verticals that they participate in. One is the interactive management group. which focuses on contact center and video software services. It's the larger segment. It actually accounts for about a little over 60% of the revenue. And then the other part of it is the asset management group that has software solutions for network infrastructure, operations, support systems, and related companies. So here, currently trading at around just over $27. We have a 12-month price target on it of $36.50.
Okay. And just lastly, Kim, here more broadly, we've talked about how small caps peaked in 2021. The Russell 2000 is still not back to that all-time high level. So what's been the problem the last couple of years, and what's shifting to make you believe it? Okay, this is a year where we're going to see more movement.
Well, you started to see the movement really when the the developed countries, Japan, have started to bring, inflation has been coming down, interest rates, and small mid-cap are very, very keyed to the interest rate structure. So with inflation coming down and interest rates coming down, it's a good landscape for them going forward. And then, as you mentioned, the enthusiasm. There's an appetite out there for this. Yes.